bunch of risks out there, but it feels as if a lot of that, in terms of traders' attitudes, is over there. And right now what's going on is stocks are going up, people are making money, and so people are buying more stocks. And it's really not much more simple than that. It's a lot of ignoring of long-term risk and playing out.
Any of the short covering, or we don't know yet?
There has been some short covering last week, but this looks like it's more momentum.
Okay.
I'm thinking a lot about, we always try to look forward to like, okay, what's the next catalyst here? Earnings season's about to start, even though we're still wrapping up earnings. But earnings season is about to start in July. But also July 9th is a date that I think about a lot, because that's when the 90-day pause on a lot of these tariffs comes up. And I think it's fair to say there's still a lot of uncertainty about what U.S. policy looks like then.
Oh my God. Well, so over the weekend, we ran a story about the Powell's speech after, or his Q&A after the Fed meeting, and we tallied it up, and he said variations of the word uncertain about 20 times in less than an hour. So that is the problem, which is there's so much unknown about this market, and you pointed to a key one. So the 90-day pause is about to end, and it appears as if Wall Street is betting that it will be extended again. We don't know, but even the 10% base tariff is painful. And the FT, we just ran a headline about retaliatory tariffs from Europe to get Trump to the table to negotiate with them. None of this is winning for earnings. None of this is going to help in terms of the long term. Doesn't mean that you're feeling it right now, though. So there is room, if there are people on the sidelines, which there are Wall Street pros on the sidelines who need to get in, who need to make money in this market, and they're thinking, okay, well, we'll take the flyer now. That appears to be what's going on, but tell me what's going to happen 14 days from now, and that seems like a lifetime.
Just one last question, because I'm trying to think, I was just doing a quick search. I think it was Rich Clarida of PIMCO, was on surveillance, and I thought he said something to the point of, let's not forget though, tariffs are already higher and are gonna be higher. So even if it's not the high levels, crazy levels that we thought initially, that's going to be a factor, and that's going to play into inflation and the ability and the amount of money that people have to spend on things, because there will be higher costs. Just got about 30 seconds.
Powell said the same thing.
Yeah.
That they're waiting to see the tariff impact. I mean, the tariffs
but we already know the floor is going to be higher. It's already there.
But the thing is, it hasn't shown up.
Yeah.
So until you see it, until you feel it, this market isn't ready to react to it. That's at least how it feels from the trader's perspective.
All right, good stuff. As always, thank you for swinging by. Of course, watching this rally, our own Eric Weiner. He's Senior Editor of Equities Americas at Bloomberg News, joining us in our Interactive Brokers studio. We got to talk about one name that's also on the move.
Yeah, one name that is partaking in this rally is Carnival. It's currently the 5th best performing stock in the S&P 500 right now, up 7.5%. It was up as much as 10.3% earlier in the session. We've got with us Brian Eggers, Senior Gaming and Lodging Analyst for Bloomberg Intelligence. He joins us here in the Bloomberg Interactive Brokers studio. It's not just Carnival. It's also Norwegian, Royal Caribbean, Viking, also higher. But it's because of news from Carnival. What happened?
Yeah, they had earnings this morning, and what's notable about Carnival is they last reported their March quarter in, February quarter in March. So that predated Liberation Day. So this is actually their first earnings print since that tariff effect. And one of the rivals, Norwegian Cruise Lines, did slightly lower revenue yield guidance for 2025 when they reported in late April because of that initial tariff effect and the concerns about the economy. So the good news for Carnival is they maintained their second half outlook, actually slightly raised their full year view. So they did not appear to experience any lingering effect of tariffs and economic worries on their bookings.
Is it right, smart by investors, Brian, that when one cruise company comes out and says something that the rest all ride, tide, what is it?
Rising tide lifts all ships.
Yeah, exactly. Thank you so much.
Yeah, I think
exactly. Like, because are they all the same that we can do that?
It's reasonable to assume that to a large degree. The great thing is Norwegian and Royal had a chance to speak to the street back in late April, right after this tariff anxiety really began to build up. Carnival hadn't really spoken about their earnings profile since late March. So this is all kind of like new territory. And the fact that they reaffirmed their outlook rather than lowering it, I think was why the stocks reacted so buoyantly.
How do you look at these cruise companies? Because you also cover gaming, you cover lodging, so you have an understanding of the whole ecosystem. When we talk to the folks at these companies and we ask them specifically about the health of the consumer, they love to say, we're such a good value. We are fine in good times and in not so good times because consumers find us a good value. Is that the case?
Yeah, I think Carnival even said on their call today, I think we're so cheap, it's stupid. That really, I mean, it's an affordable vacation when you wind up with other types of vacations, but they're also a beneficiary of the fact that leisure discretionary travel has been pretty resilient. We've been waiting for some shoe to drop in terms of the impact of tariff concerns, but it's been pretty strong.
We thought that shoe dropped a few months ago when all the airlines pulled their guidance, or United gave two different sets of guidance.
Did a little bit. I think what Carnival said specifically about economic concerns is April, their bookings did weaken a little bit, consistent with what we saw from Norwegian. But into May and the first half of June, they kind of came back. So there was an early reaction where consumers, pulled in their spending a little bit, or at least were a bit more cautious. That seems to, at least for now, have receded. Obviously,
Brian, these guys, I mean, people book out cruises sometimes a year, 2 years in advance. And is there anything that we got in terms of longer term outlook? I mean, they can cancel, we know that. But I always like talking to these folks because they do have bookings that go kind of further out.
Yep. So they're 90% plus booked effectively for this year. Going into next year, it's a little too early to tell because the big bookings season for cruise lines is typically first couple months of the calendar year. So we don't know yet, but initial indications or bookings are strong. I mean, we're very watchful about this, and frankly, we were cautious because of the fact that if the economy does slow down, these are consumer discretionary companies. But Carnival, for its part, relatively moderate supply growth. They seem to have sustained that consumer demand.
All right, good stuff. So glad we could check in. Thank you.
Thank you.
Brian Egger, he's Senior Gaming and Lodging Analyst for Bloomberg Intelligence right here in our Bloomberg Interactive Brokers studio. All right, folks, we continue. When we come back, we're going to talk a little bit about those driverless cars.
I'm excited.
We both are.
3:21 on Wall Street. I'm Amy Morris. This Bloomberg Business Flash is brought to you by Home Title Lock. Homeowners, when was the last time you checked your home title? Go to HometitleLock.com/Bloomberg for a free title history report to make sure you're not already a victim of title fraud. That's HometitleLock.com/Bloomberg. Fed Chair Jay Powell delivered a semi-annual monetary policy report to the House Financial Services Committee. He suggested lower inflation and weaker labor hiring could mean an earlier rate cut this year. He also added impacts by the tariffs on inflation could show up in the June and July numbers. Boston Fed President Susan Collins says currently modestly restricted stance upon monetary policy is necessary, even though it has slowed new residential real estate investment. Collins acknowledges that the housing market is sensitive to interest rate changes. We do check the markets for you all day long at Bloomberg. The S&P 500 up 74 points, NASDAQ up 304, the Dow up 544 points. The 10-year Treasury yield at 4.29%, the 2-year yield at 3.81%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That is a Bloomberg Business Flash. Now back to Bloomberg Business Week Daily with Carol Masser and Tim Stenovec.
Thanks so much, Amy, for that update. Do appreciate it. Hey, we really wanted to do a deep dive on driverless cars, and we've got the perfect duo. The reason why we wanted to talk about this is because Uber shares among the best performing in the S&P 500 right now, fourth best performer, up 8%. The company said in a press release that it'll be partnering with Waymo to offer ride sharing through autonomous vehicles in Atlanta. On the other side, you've got a company like Tesla, on a points basis, the worst performing stock in the S&P 500, Carol, down 1.7%, kind of giving back some of the gains that it got yesterday.
Right.
On the successful or what was purported to be successful demonstration of its driverless car tech in Austin.
Yeah.
Now there are concerns that regulators are looking into incidents where the self-driving robo-taxis appeared to violate traffic laws during that day offering paid rides in Austin.
Yeah, I mean, there's some concerns, some questions. We've got the perfect duo to talk about all of this. Max Chafkin is Bloomberg Business Week columnist, co-host of the Elon Inc. podcast. Craig Trudell is Bloomberg News Global Autos editor and the editor of the Hyperdrive newsletter. Max right here in our Bloomberg Interactive Broker studio. Craig out there in London. Craig, let's start with you. All right, so there's a lot going on in this sector. What do we know about how things have been going down in Atlanta, in Austin, like how it's all progressing? And full disclosure, Tim and I both have done Waymos on the West Coast. I've also done them in Arizona, and we kind of love them. So how's it all going down? Because all of a sudden it feels like everybody's all in on these driverless cars.
Yeah, I had to say, I mean, just to start, your experience of Waymo's, being sort of surprised and delighted from the sounds of it is consistent with, basically everything I hear at this point. You occasionally do hear people sort of, to the extent that they denigrate, Waymo's at all, it's just, oh gosh, I would be too scared to get into one of those. But, almost universally, when you talk with people who experience it, they get a kick out of it. You don't see a ton of sort of negative takes on sort of how they perform. They've held up quite well. The company's been forthcoming about its safety record and is pretty transparent about if and when it does have issues. I think things are sort of night and day in terms of how the company has approached things with in comparison to Tesla, where you have Musk, for years sort of hyping up what is driver assistance, software that he offers as something more than that, and calling it full self-driving, not delivering it until this past weekend. And once he has taken people out from behind the wheel, on day one, we see these incidents that are pretty troubling and getting the attention of the National Highway Traffic Safety Administration.
Okay, we're going to talk more about those in a second. I want to bring in Max Chafkin, who's been following the industry closely. And Max, when we've spoken to you in the past about the driverless car technology, specifically Waymo, you've been a little skeptical about it.
I think everything Craig is saying, everything you're saying is true. The questions around Waymo are business questions. Essentially, is this more than a very, very expensive, money-losing attraction for tourists in a handful of cities, which it definitely is compelling in that sense. There are questions, and these are questions that, even Waymo has acknowledged, like they need to figure out, they need to turn this into a money-making business. They feel like they've gotten the technology to a point that's pretty good, and now they're working on the business stuff. And this Uber deal, of course, is part of that. That's part of why you're seeing the stock go up. And then, when you compare it to Tesla, the Uber stock go up. When you compare it to Tesla, Tesla is, I think, technically, like a good way to think about this is they are years behind where Waymo is. Like Waymo was doing some of the stuff that Tesla is doing years ago, like 5 years ago. There are ways in which Tesla, yes, is impressive and ahead. Tesla has a lot of miles logged using its driver assistance technology, which it also confusingly calls full self-driving. But Tesla is really at the beginning of this. And like when we're like, they have not, even this pilot program we're talking about, very modest. It doesn't include members of the public, just a handful of influencers in a very small part of Austin. So just very early, and everything that Waymo is doing, both in terms of customers and then in terms of on the business side, kind of makes that point, just shows you how wide the gap is and how far Tesla is, at least at this moment, from actually operating, a money-making robotaxi service.
All right, so this came up in the news. Are we sure that there's some folks in some emerging market country that aren't sitting with a joystick, like actually driving the Waymos?
There are monitors. There are people monitoring the Waymos. Okay. I think the question, they're not using joysticks, according to Waymo.
Little steering wheels?
They're not using little steering wheels, but they are there watching the Waymo. And that's like part of the business problem for both of these companies. Like you potentially have like this very expensive piece of hardware and then a bunch of expensive engineers who cost more money than Uber drivers who are having to oversee these autonomous systems. So that's still a question with Waymo. It's a bigger question with Tesla.
Hey, Craig, come on back in here because you cover more than just these two companies and also more than just the sort of driverless element here. But a question that I have is where does this technology leave the traditional automakers? Because there was this promise from Elon Musk years ago. I mean, I've lost count of how many years ago this was, but he basically said, your Tesla will become more valuable because you will be able to essentially set this thing free as a robotaxi when you're not riding around in it, and you'll be able to charge for that. Where does all of this leave the more traditional automakers?
I mean, I think to your point, there was a real sort of freak out in Detroit and Wolfsburg and in Toyota City almost a decade ago now, because Musk started making these pronouncements along the lines of what you're describing, and everyone kind of panicked, right? And we saw sort of everybody put together plans to sort of answer what Tesla was up to. You saw GM acquire Cruise. You saw Ford, invest in this company called Argo, and Volkswagen invested in them as well. You saw Toyota stand up its own sort of self-driving, outfit, and hire sort of top-notch talent for it. And here we are, roughly a decade later. Argo's gone bust. Cruise has been sort of put out of business by GM. I think a lot of the established manufacturers are saying, you know what, we're going to try and make money off of these driver assistance systems that kind of make the human driving safer, or at least we hope can offer that benefit and this sort of safety and convenience. But this is just not going to happen in sort of a major way for quite some time, and we may not be able to afford to invest in it to the extent that a company like Google can.
Yeah, and Waymo, Google, even there, we're talking, I don't think we know the exact numbers because of the way that they report revenue and so on, but they've dumped tens of billions of dollars into this. This has been an incredibly expensive endeavor, the kind of endeavor that really only a company like Google, or really a handful of other companies can do. We even saw Apple, Craig didn't mention Apple, but they also tried to get into this business and got out of it.
Threw in the towel.
For some of the the same reasons.
Despite having super deep
Now,
pockets.
and the challenge here for Tesla is that a lot of the investors who are betting on this thing, and even to some extent Elon Musk, have sort of decided that this is the future. That Musk has said this over and over. You shouldn't think of Tesla as a regular car maker. You should think of it as an AI company. And now here it is. We're seeing the AI, and it's just a long way from being a fully fleshed out robotaxi service, and whether or not they can somehow get there in the crazy timelines that Elon has offered. He said they're going to have something like 100,000 cars on the road by the end of this year. Just huge numbers that would blow Waymo out of the water if they delivered. He's created a huge challenge for himself.
Well, I do also wonder about the value, and Craig, come on back in here, in terms of having, whether it's Waymo for Alphabet and obviously the self-driving for Tesla, the amount of data that they get and what they learn in terms of technologically creating these. We've talked with our Steve Mann of Bloomberg Intelligence, who's talked about the robotics and the manufacturing that has been going on in China and what technological capabilities that has given them. So I do wonder, by these companies doing these kinds of things, what they ultimately get out of it. Is it still a plus?
Yeah, I think that's been the sort of go-to messaging on Musk's part, right? Is that, my approach, my being Elon Musk, is, to put this hardware on every vehicle I sell. It's a much cheaper and less robust, hardware set than Waymo puts on its cars, sure, but people can afford to actually buy it. I can ingest all of this data, and, I can put more cars out on the road, bring in more data, therefore I will eventually win. I think that stood to reason to a lot of people, and yet it is all sort of theoretical, right? We don't know whether that data advantage will mean anything in the long run. And we've also sort of heard from Musk sort of conflicting messaging in the years since he was making that argument of we're not going to sort of hard code our cars based on all of the data that we bring in. We're going to just sort of build a robust system that can sort of make decisions on the fly, and we're not going to try and code into our cars what they should or shouldn't do. Mm-hmm. And so there's sort of speaking out of both sides of his mouth, and a lot of theoretical messaging on his part that makes you sort of question whether or not he actually has the advantage that was sort of believed half a decade ago, say.
Max, just want to bring you in for the last 30 seconds. Given Elon Musk's recently tumultuous relationship with President Trump, does that put the regulatory elements around self-driving technology for his company, does that put it at risk?
I think there are real regulatory questions, also maybe some securities questions. Like, people have made claims about Musk's sort of seeming to exaggerate at times. That said, I don't think the challenge here is a regulatory challenge. It's a technical challenge. It's on one hand, Elon Musk saying these cars can operate totally autonomously, and you watch in the videos, and they have somebody in the passenger seat with an emergency brake, probably somebody sitting in a control center, and they're still struggling,
Yeah.
And so that's the question: how to make the tech work.
All right, got to leave it there. Great discussion. Max Chafkin, of course, and our Craig Trudell. Just want to mention a headline from the New York Times that the U.S. strike on Iran setting that nuclear program back by just a few months. More details to come.
6:40 on Wall Street, I'm Amy Morris. Fed Chair Jay Powell told lawmakers the central bank is in no hurry to lower interest rates as officials wait for more clarity on the economic impact of President Trump's tariffs. In the first of 2 days of testimony on Capitol Hill, Powell told lawmakers that, quote, many paths are possible for monetary policy. We check the markets all day long here at Bloomberg. The S&P 500 up 74 points. NASDAQ up 292 points. The Dow up 575 points. The 10-year Treasury yield at 4.28%. The 2-year yield at 3.8%. And both WTI and Brent crude are down more than 5%. Cleveland Fed President Beth Hammack says interest rates are only modestly restrictive and could remain steady for some time.
On inflation, we've made good progress, but we have some distance to go before we sustainably reach our 2% inflation objective. It may well be the case that policy remains on hold for quite some time before the committee initiates very modest cuts to return policy to a neutral setting.
Hammack notes that official readings might not capture current developments, including a recent increase in oil prices. And EU officials are warning that a baseline Trump tariff could still spur some retaliation. The European Union plans to impose retaliatory tariffs on U.S. imports, including Boeing, if President Trump puts even just a baseline levy on the bloc's goods. The EU is preparing tariffs on $116 billion of American products in response to U.S. levies. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. We've got just about 17 and a half minutes to go until we wrap up the trade on this Tuesday, and pretty much holding on to most of our gains. We've got the S&P 500. Just heard from Amy breaking down the trade. Still up about 1.2%, 1.25% on the S&P. Dow is up about 1.4%, and you got the Nasdaq 100 up just shy of 1.6%, just rolling over a little bit in terms of the gains. But yeah, much more of a risk-off trade. Having to say that a lot of it has to do with easing what seems to be maybe a truce between Israel and Iran. But we did have a couple of reports, CNN and also the New York Times coming out and saying basically that the U.S. strike that was on the Iran, or said to be on the Iran nuclear facilities, that the Times is coming out and saying that it only set their nuclear program back by a few months. It's something that former Secretary of State Antony Blinken wrote about too in a New York Times op-ed, saying that maybe that what was done, at least citing some experts, that those bunker busters, that maybe they didn't necessarily do everything that everybody thought. And this is the question that we've been trying to get to, right? In terms of nuclear capabilities, enrichment capabilities, what really has happened in Iran? What's changed?
Yeah, I think one thing to note is that this report cited by the New York Times stands in stark contrast to what we heard from the president in recent days. As Tony Capaccio, who covers the Pentagon for us, told us on our air yesterday, Carol, you have to wait for the damage assessment report to drop. And it's something we heard on Sunday from the Pentagon as well, in order to get a full understanding of the damage here. So take what we've heard, at least as of yesterday, Tony said, with a grain of salt.
And this was according to the New York Times, a preliminary classified U.S. report that says the American bombing of Iran's nuclear sites sealed off the entrances to 2 of the facilities, but did not collapse their underground buildings, according to officials familiar with the findings. These early findings conclude that the strikes over the weekend set back Iran's nuclear program by only a few months. Again, according to the officials familiar with the findings. So we're going to be digging through all of that.
Yeah, the New York Times writing that the findings suggest that President Trump's statement that Iran's nuclear facilities were obliterated was overstated, at least based on the initial damage assessment. Congress had been set to be briefed on the strike on Tuesday, and lawmakers were expected to ask about the findings of the assessment. That session was postponed. Senators are now set to be briefed on Thursday.
All right, so watching all of that, we want to bring in our Drive to the Close guest, Dustin Reed. He too has to watch everything that's happening, certainly in the geopolitics area, and of course domestically, what's going on in the U.S. that impacts companies and investments. Dustin Reed is head of fixed income at McKinsey Investments. His team manages about $40 billion in assets. He joins us from Toronto on this Tuesday. Dustin, every day there's stuff that comes at us in the morning that might show and paint one picture, certainly when it comes to geopolitics or the domestic landscape or the regulatory, and then it can be by the afternoon or evening, things can shift. Again, these are a couple of reports based on a preliminary classified U.S. report, but the Middle East conflict war between Iran, Israel, that brought the U.S. into the fold. You know, this morning we were talking about what seemed to be a truce between Iran and Israel. If this continues on, though, how does that maybe kind of change your thoughts about the investment environment, the U.S. investment environment, the global investment environment?
That's a great question. Thanks very much for having me on the program. I think, you know, this market wants to buy risk. You know, whether you look at equities, whether you look at fixed income, whether you look at credit spreads, whether you look at FX, I think this market cross asset wants to buy risk. And I think, you know, depending on what we have to a point, whether we have a ceasefire or we do not, what's actually happened in Iran and what has not, the market doesn't need a whole lot here to be enticed to buy risk. I think cross asset. I think that's the message that we're getting, not only today maybe, but also from yesterday. And you look at where equities are obviously trading versus all-time highs.
Why is that? Why is that in this environment? Why does it seem like risk is tolerated in a way that perhaps historically it hasn't been?
No, I think it's a great question. I think it's one of the things that institutional investors here, you know, grapple with every day. I think one of the reasons is that the reality is there is a lot of money in the system via various channels. And obviously there was a lot of money in the system during COVID and after COVID, but a lot of that money still remains. So even when you look at what's on the money market side, there's tons of money on the money market side. And, you know, those rates are coming lower and that money probably needs to be put to work. And there's a lot of money in the system. And I think as long as there's a ton of money in the system looking for a home, then, you know, you really need to see a significant prolonged risk-off event for markets to trade so-called risk-off for a prolonged period of time. But it's the money in the system that I think allows what, you know, those of us that have been around a few years and maybe would have expected a decade or 2 decades ago to be a risk-off environment, or at least a semi-risk-off environment, to not necessarily be the case as we sit here and trade today.
So when it comes to Fed policy, and Fed Chair Jay Powell, of course, up on Capitol Hill today, and he'll go back tomorrow.
Yeah.
How are you gaming out what we might get from the Fed? What ultimately is kind of guiding your thoughts around that?
I think the Fed's been extremely interesting here the last little bit. Obviously, we spent a ton of time last year and year to date around the tariff story, which has been, you know, much spilled ink on that topic. And the Fed, while I'm biased, admittedly, I think is always important. I think the Fed importance is coming back into vogue. And I think that the Bowman commentary, maybe I can start with that yesterday, I thought was extremely interesting. Vice Chair Bowman for supervision, Vice Chair for Supervision, Bowman, you know, effectively saying that she's open to a July easing by the Fed, you know, based on a number of factors, of course, if. But, you know, for those of us that watch the Fed, you know, Vice Chair Bowman is generally not seen as a little bit, you know, as dovish. And so for her to have said that, you know, in the wake of a Fed meeting where Chair Powell effectively said we want to see the inflation data, tariff pass-through inflation data for June and July, that print in July and August respectively, was kind of a surprise and clearly got the market, at least particularly the fixed income market, I would say, moving yesterday. Now it looks like a little bit of daylight between where maybe Vice Chair Bowman is and where Chair Powell is, given his testimony today. I mean, he did state the obvious that if a few things happened, we could cut rates. But at the same time, he also said that we want to see, and reiterated from last week, we want to see what the inflation pass-through is like during the summer months. He does not look like to me like he wants to cut rates this summer, but I think that September is obviously very live, and that's obvious from the pricing. But I think investors need to start thinking about the possibility of potentially a 50 basis point cut at the September F1.
Oh, wow. Okay. Just before we let you go, we did, and Mike McKee, our international economics and policy correspondent, reminded me a little earlier today that even though we had some dovish commentary late last week that did get people optimistic about a potential July cut, we did hear from John Williams, who said today of the New York Fed, it's entirely appropriate for officials to hold interest rates steady while they analyze the full impact of policy changes on the jobs market and inflation. Then also Beth Hammock of the Cleveland Fed, that officials may hold borrowing costs steady for some time. So there's a little back and forth.
Yeah, absolutely. And I think Governor Waller's comments late last week, although along that direction, were not necessarily a big change from where he's been over the last number of months. To me, it was Vice Chair Bowman yesterday that really got things going. I agree. I think it's very difficult for the Fed, unless something really falls away on the labor market side, for the Fed to cut at the July meeting, which is late July. But I think the consensus is clearly building for something to happen in September, maybe something to happen maybe more consecutively than the market was thinking beyond September. And this idea of 50 as a possibility for September, I think, is going to become a thematic here over the summer months. I mean, obviously, different reasons, but of course there was a significant discussion last July. They did not cut, and then they cut by 50 in September.
All right, got to run. Dustin, thanks so much. Dustin Reed, he's head of fixed income at McKenzie Investments, joining us from Toronto. All right, we do want to get to what has become the most read story on the Bloomberg terminal, and that has to do with some reporting out from the New York Times, classified findings indicating that the attack sealed off, that is the attack that the U.S. did on Iran's nuclear facilities, sealed off the entrances to 2 facilities, but did not collapse their underground buildings. Let's get to it with Adam Farrar, Bloomberg Economics Senior Geoeconomics Analyst for the Asia Pacific. He's out there in our Washington, D.C. bureau. All right, Adam, what are you guys hearing about these reports? I think New York Times has some reporting, CNN also had some reporting, but what are you guys hearing?
So, I mean, we're seeing the same thing you are, that, there's an initial Defense Intelligence Agency report that seems to have been leaked, or portions of it leaked, that implies that the damage to the Iranian nuclear facilities at Fordo and potentially Natanz was not as severe as the president initially said. The reality is this isn't terribly surprising, given the unique nature, particularly of the Fordo facility, and questions that remained up until the strikes about how deep the underground caverns were and how deep the U.S. GBU-57, or the bunker buster, could go and what it could damage. And so it is important to say that even this assessment does say that there was significant damage to the support infrastructure at Fordo and the entrances, as you already stated. So I think, this is not to say that those big munitions didn't do real damage, but the question it remains as to how much of that is permanently destroyed.
Yeah, and I guess also, what is permanent if Iranians were able to, at least in some of these instances, remove some of the enriched uranium to another site? What do we know about that?
So I think the question and problem here is what we don't know, right? I think there's lots of questions out there, and good ones, about what was moved in the lead up to the strikes and throughout the crisis that has emerged over the last 2 weeks. It's certainly possible, given the small size of the enriched uranium, which some people have indicated could just fit in the back of 10 sedans, that it is perfectly reasonable that the Iranians were able to move some of that enriched uranium to other sites in Iran, potentially known sites and/or secret sites that could enable them to continue their nuclear program.
One of the things that I'm curious about, Adam, and so I think it's something we've all been trying to figure out, what exactly has gone on. This report, I mean, how do we figure out clearly, accurately, like this report?
Right.
Who's it coming from? Where's the intelligence coming from?
Like, we need to be underground there to get an understanding of what the damage is, right?
Yeah,
right, Carol?
Right, exactly. I mean, are there spies on the ground? Like, how do we trust? Not that I don't trust, information from our government, but how do we know that what we're getting, this is the truth?
Well, to start with, I think it's important to reiterate that even the reporting from the New York Times and others indicates this is an initial battle damage assessment. So this is likely based almost entirely on assessments of what the intelligence community knew about the Fordo and Natanz facilities prior to the strikes and what they've observed via overhead imagery, and then potentially what they're picking up on communications and signals intelligence about what Iran is saying the damage looks like. Obviously, the Israelis have demonstrated over the past 2 weeks that they have ample spy and intelligence resources in Iran. So it's possible some of that is feeding it as well. But, you know, I think we've seen clearly that there are still big questions to be answered about how severely damaged the facilities are and what that means for pushing back the Iranian program, whether this is a question of months or years that the Iranians would be delayed to get these facilities up and running again.
Are there concerns? And look, I know this is a preliminary battle damage assessment, so we're not working on much here, and we have the New York Times report to cite at this point. But Adam, it raises the question about where do we go from here, and where does the Middle East go from here? And what is the United States involvement from here? Because I think one question a lot of people have is, okay, if this actually only sets the Iranian nuclear program back by 6 months, as this preliminary report suggests, then does that mean the U.S. needs to further its involvement? Does it mean that the so-called truce that we're seeing right now between Israel and Iran is short-lived? How are you thinking about all these things?
So those are the right questions to be asking. I think we're working through right now the broader question of what is the intent of the Iranian regime. No matter what the bombs are able to accomplish, the question always falls back on whether or not the regime is intent on building a nuclear device. I think it's incredibly important to remember that nuclear technology is not new. It's quite old. The United States building out its first nuclear weapons towards the end of World War II. So with money and time and expertise, the Iranians certainly could develop a nuclear weapon, and that is obviously of great concern to the U.S. government and particularly the Israeli government. And so we return to the same question we were trying to answer before these strikes began of whether Iran is committed to a negotiation process by which it would give up the right to enrich uranium to a point where it could proceed towards a bomb, and whether it's willing to accept the oversight that would be necessary for the international community to feel confident that Iran is not seeking that breakout moment.
Right.
But I think there are big issues here to be resolved, and moreover, this question of how the regime now calculates that decision after being hit by the Israelis and the United States so hard.
Yeah, no, it's interesting, right? And the questions of kind of what is the damage, what are the nuclear enrichment capabilities that still exist? I mean, these are all super, super important questions. Adam, thank you so much. Adam Farrar, Bloomberg Economics, Senior Geoeconomics Analyst for Asia Pacific, joining us from our D.C. Bureau. Do not go anywhere. We're counting you down the close. The closing bell starts now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele, taking you through to that closing bell with a global simulcast that starts now. Scarlett Fu in the TV studio, Carol Masser and Tim Stenovic in the radio booth. Welcome to our audiences across all of our Bloomberg platforms, including our partnership with YouTube. It's great to see you guys illuminated for a change here on a day where the market is touching fresh or close to record highs.
I mean, this is one of those things I'm like, well, what has fundamentally changed? Can we really count that like everything has calmed down in the Middle East? I'm thinking about this report that's just, preliminary findings of the U.S. strikes in Iran, whether or not the nuclear enrichment capabilities have been as damaged as we've been hearing maybe from the White House. I just feel like there are still so many questions out there, but hey, everything's awesome today.
Yeah, investors certainly thought so. And we did see a little, ever so slight pullback at the end of the day, perhaps on that report from the New York Times. But really surprising to me that, and maybe because it's preliminary, we just had a great conversation with Adam Farrar down in Washington, D.C. It reminded us, look, this is a preliminary report. It's what we know so far. That if these sites weren't destroyed or at least damaged as much as people had thought, then that program isn't as set back as people had thought, and perhaps there could be more skirmishes moving forward.
I think there are a lot of people expecting a lot more skirmishes anyway to move forward, but right now what we have is calm for the moment, and investors seem to have gotten comfortable pricing in a lot of uncertainty, and what we know right now is there's just going to be more uncertainty.
And others would say it's just growth. You got real fundamental earnings growth that's still there. We're underpricing what the potential growth going forward.
All right, well, at least for right now, the market's taking it in stride. You can look across all of the tapes. You have almost 200 companies hitting 52-week highs, and several hitting fresh record highs. That includes names like Broadcom, Microsoft, Netflix, and IBM. The NASDAQ 100 would close at 22,175 on February 18th, its last record high. Well, it surpassed that here on the day. The NASDAQ 100 closing at 22,190, up about 1.5%. The NASDAQ Composite up 1.4%, still has a ways to go to get to its record high. The S&P 500, which briefly traded above 6,100, closing at 60.92 and change, up 1.1%. 61.44 and change is your all-time high. The Dow Jones Industrial Average up more than 500 points or percent on the day, and the Russell 2000 keeping pace, up about 29 points or 1.3%.
All right, we've got about 376 names in the S&P 500 higher today, guys, 123 to the downside. And Scarlett, we're now up about 3.6% on the S&P for the year.
Yeah, pretty incredible. Let's take a look at the sectors and how they performed. You have 11 sectors in the S&P, and only 2 of them declined today. Energy lower by 1.5% as oil prices slumped for a second day. Consumer staples, little changed on the day. The best performers are technology, led by chip makers, financials also higher, and communication services all gaining at least 1.4% on the day.
All right, a lot of green. I'm going to get to some big ones. Carnival was a bigger gain. I think at one point was the #1 gainer in the S&P 500 earlier in this session, finishing the day with a gain of about 7%. Off its highs, at one point it was up as much as 10% today. The company coming out, the cruise operator, boosted its adjusted earnings per share forecast for the full year, and it really did lift the entire group. So we saw a lot of peers rising as well. There were some fears, if you go back about a month or so, maybe some concerns about some of the unrest, some of the tariffs, the trade, and about some of whether or not that was going to cut back on consumer spending. But we did see Carnival come out in a big way today. Advanced Micro Devices, #2 gainer in the NASDAQ 100. It's up about 7%, just under 7% in today's session. You might remember yesterday we did have one Wall Street skeptic turned into a bull with its progress, or looking at the progress of AMD in AI chips and computing systems. We're talking about Melly's research analyst Ben Reitzis upgrading AMD. That was yesterday to a buy from hold. He also raised his price target to 175 from 110. So we did see AMD up about 1% yesterday and adding that 7% gain in today's session. And then Uber Technologies up about 7.5% in today's session. Today beginning offering its customers driverless Waymo rides in Atlanta. So that makes it its second market after Austin. The two companies teaming up instead of competing against one another. So Uber definitely one of the outperformers in today's session. Tim.
All right, let's go to some of the underperformers. I want to start with Tesla on a points basis, the worst performer in the S&P 500. 2.35% to the downside, giving back some of yesterday's gains. Remember, that stock was up more than 8% yesterday after the company rolled out its long-promised driverless taxi service to a handful of riders in Austin. Well, today shares fell. U.S. auto safety regulators are actually investigating incidents where Tesla's self-driving robotaxis appeared to violate traffic laws during the company's first day offering paid rides in Austin. Once again, shares now down by today 2.4%. I think we got some.
Let's take a look at FedEx. The shares they are moving lower in the after-hours trade. Their earnings just now crossing the wire, with the company saying that its adjusted income in the fourth quarter coming in slightly above estimates, $2.02 billion. That was the operating income figure. The street was looking for 1.91. Adjusted EPS $6.07. The street on average was looking for $5.81. On the revenue side, $22.2 billion, and that also is a beat. Here's your guidance going forward. The company says first quarter revenue will grow flat to 2% is the guidance that they're giving for first quarter revenue growth. The company says first quarter adjusted EPS should come in at a range of $3.40 to $4 even. The street on average was looking for $4.03. So that looks to be a little bit of a miss when it comes to its outlook. The company also saying that it's not giving a full year profit view, guys, due to uncertain global demand, and you see the shares bouncing around from losses back to gains.
And a part of the FedEx story right now is really what it does with costs and how it contains those expenses. It's worth noting here that FedEx sees its 2026 capital expenditures at $4.5 billion. Analysts were looking at somewhere in the neighborhood of $5.01 billion, so just over $5 billion. FedEx is going to be spending less in the coming year than what analysts had anticipated.
Yeah, we've seen both FedEx and UPS having a tough time. FedEx is down about 18% year to date. UPS is down about 20%. And I'm just doing a quick check on UPS in the aftermarket. I think initially it was a little bit lower. It's up about 0.5%. So we'll continue to track them and look for some more color, certainly about FedEx. But yeah, that's a big red sticky, not giving fiscal year profit view due to uncertain global demand. So I want to know a little bit more about what that uncertain global demand specifically is.
Yeah, shares down about 1%, but bouncing around in the after hours right now. Wait for commentary on the call as well. I want to get back to, go ahead, Romain.
Yeah, I also just want to point out, too, that, and we should just acknowledge also the passing of Fred Smith, who of course, was the founder of this company, and they actually lead off their press release with a nice commentary about their late founder. Sorry about that, Tim.
Go ahead. No, it's all good.
Yeah.
Okay, let's go back to some of the decliners. I mentioned Tesla. I do want to talk about RTX, formerly known as Raytheon. We did see shares of defense companies fall today. RTX down 2.72% today. Among the worst performers in the S&P 500, defense stocks broadly declined as tensions appeared to cool in the Middle East. And finally, Circle Internet shares fell by more than 15% today. It turns out this stock also goes down. It doesn't just go up. The company's
I think it's the fourth time since it went public that it's gone
yeah,
down.
shares are up close to 620% since that June 3rd IPO, but down 15.5% today. It was initiated at Compass Point Research and Trading with a recommendation of neutral. The concern is competition is expected to increase after that legislation here in the U.S. was passed. Once again, Circle down 15.5% today.
All right, I'm taking a look at the bond market, guys. Pretty well bid all across the board, pretty much the whole day. That front end coming in by about 5 basis points, the back end coming in very similar as well. A couple things happened. One, you had Fed Chair Jay Powell making no news, so that helped. Two, you also had two-year bond auction, went on without a hitch. Demand was actually quite strong. You had a ton of Fed speakers today. Fed Governor Michael Barr, the latest, saying that he does expect inflation to rise due to tariffs. The second round effects could make tariff inflation persistent. So sort of, again, talking about the different splits on how to look at tariffs when it comes to inflation. And want to point out we get a 5-year auction tomorrow, and then we get a 7-year. So together we get like $104 more billion coming over the next 48 hours.
I got to say, this has been a lot of stuff coming at us. I know that this, I'm just kind of a little dumbstruck here. I don't know if you guys saw.
When Carol's dumbstruck.
It's been a long day.
It's been a long day. I think you guys are talking about this story. I just want to bring it up. When I read in this morning about this ex-CFA Institute executive charged with embezzling millions, all I could think is like, if somebody knows how to embezzle, it's probably somebody who has these, like, I'm just saying, right, knows how to kind of maybe.
It's serious business.
Perhaps I know.
Well, as only charter holder here, I would just say this was a little bit of a shock that this actually occurred and that it occurred for so long. But at least they flushed it out.
Just for the purposes of our viewers and listeners, level 1, level 2, level 3, Romain, where are you?
Yeah.
Oh, he has it. He's done it.
You've done it. Okay.
How dare you?
You've passed all.
I mean, when I passed, you didn't see me like parading around the office with my charter above my head. You must have been off.
Did you learn how to embezzle?
No, you learned the exact opposite. It's called ethics.
Oh, wait.
Makes up a huge percentage of the test.
Did the guy, though, have a CFA? He was the CMO of the CFA, but did he have a CFA?
That's my point. Like, did he? I don't know. Was he level 1? Did he pass?
You guys are getting us.
That's a good point. Here. That's a really good point.
Right?
But congratulations, Romain. Good job.
Thank you.
It's like a couple years too late.
Yeah.
It's actually what this is all about.
All right, I think we have to wrap. All right, that'll do it.
Romain slays.
All right, that is our cross-platform radio, TV,
that was just for you, Alex.
Bloomberg Originals. We do it across the board. All right, Alex is heading out for the day, and of course, Scarlett and Romain continuing on TV. We will as well on Business Week. All right, we'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It's a hot one.
As a wise man once said, man, it's a hot one.
What?
I guess we don't have the rights to the song. That's okay. Carlos Santana, 1999, Smooth, Rob Thomas.
Oh, I love that song.
Yeah.
I was just listening to it actually at a wedding. Was it a wedding over the weekend? Something. At a
Maybe it was
wedding.
the zoo. I don't know.
It was a wedding.
It was, okay, it was a wedding.
It was a DJ.
102 degrees here in New York City as we speak right now.
It's so crazy hot. I don't know about you guys.
Ugh.
Last night, I walked in, it's like, everything's off. It was so hot. It was unbelievable. Like, we have no spring anymore.
There's a massive heat dome
You're never
squatting
speechless.
on North America for most of the week.
It's
Nearly
not funny.
150 million Americans
crazy hot.
in 28 states under some level of heat advisory. This from the National Weather Service as of Monday morning. The good news is it's on the way out. Heat indexes in the triple digits through at least Wednesday. Mark Gongloff has some news for us that's not so great.
Yeah.
It's just a taste of what's to
He's
come.
Mr. Sunshine every time he comes on.
We don't need any more sunshine today.
No, I like talking to Mark because with everything going on in the world, we have to really still be focused on what's going on in our environment. Mark, of course, editor of Bloomberg Opinion, focuses on climate change, covers it. He's a must read, and he joins us from New Jersey, where it is also really hot. Mark, I mean, this is kind of our new reality, isn't it?
I'm afraid it is, and I'm not going to sing to make matters worse, although Tim inspired me. But it is 102, so it's too hot to sing. Man, it's a hot one. And, you know, it is, unfortunately, as hot as it is now, as hot as this summer is and will be, it's one of the coolest summers we're ever going to have again. And I hate to, that's one of the most horrifying things I could probably say, because what we're in the middle of is like a transition to sort of a new normal, although it's kind of like a thing that could keep getting worse and worse unless we take steps to stop it, so that maybe 10, 20, 30 years from now, a summer like this would be considered a relatively cool one, maybe even cooler than normal. And the extremes, like this is an extreme summer right now, the extremes will be way more extreme than we have ever experienced before.
Clear it up for us, though, because you start your piece out by noting that weather is not climate and a heat wave is not proof of human-induced global warming.
Yeah. As the climate deniers who email me religiously always point out, it's always hot in summer, always has been. That is absolutely true. One heat wave doesn't prove human-caused climate change any more than one snowball disproves it. But what scientists have been able to do is to run models and look at the data going back historically and into the future and say that, this heat wave that we're having now is X times more likely because of the atmosphere being hotter. And it's this heat wave that we're in the middle of right now is 5 times more likely because the atmosphere is just hotter. And the hotter we make the atmosphere, the hotter the heat waves are going to get in the future. And it's one of the simplest things about climate change. People struggle to attribute hurricanes and stuff like that, but wildfires and heat, things that involve temperatures, it's pretty easy to say, okay, well, high temperatures translate into higher temperatures when things get really extreme.
All right, forgive me if this sounds really stupid, but I actually just asked Tim, and he's like, I don't know, let's ask Mark. So I don't feel so bad. Why is it hotter? Is it because we don't have ways to compensate the heat that's out there? Like, what is the really main reason?
So, I mean, you go into the weather, it's a high pressure thing that's stalled out and it's trapping heat and humidity. That can happen. That's happened in the past. The issue is like some of the heat, the level of heat is just generally higher. The other, and where it really gets tricky is in the nighttime. You used to be able to, if it was 100 degrees during the day, maybe it would cool down at night and give bodies and buildings and roads that are buckling and everything a chance to cool off. Now you're having, high heat indexes in the middle of the night. It didn't get below 81 here last night, and it was also kind of like muggy.
Mm-hmm.
And so that's hard, unless you have air conditioning, it's hard for human bodies to adapt to that. And you just need that time to cool off. And buildings need that time to cool off too. Everything needs that time.
Mark, one thing that I thought about today, this is like the depressing stuff that goes through my head. When I wake up and it's like 90 degrees outside already. It's the fact that we're using, and we're getting emails and text messages here in the city. I don't know what you're getting in New Jersey, but from Con Ed that are like, okay, use your air conditioner during these times. Don't use them during these times. I'm seeing like notices online that voltage is dropping in some places because of strain on the grid as a result of stress from people using this equipment. I'm thinking we're just making more and more electricity by burning fossil fuels and exacerbating the problem in an attempt to make ourselves not get hurt as a result of this hot weather.
Yeah. I mean, first of all, I'll say air conditioning is a thing that saves lives. And I'm not disparaging air conditioning. I have it in my house right now. I'm very grateful for it. I have actually you can call me a hero if you want, but I've turned my thermostat up to 80. When it gets to be like 100, I just turn my thermostat way up to partially to like save energy, but partially because I'm terrified of a blackout in the middle of this sort of thing. So when you put this kind of strain on the system, you do get blackouts and brownouts, and a blackout in a heat wave can be a really deadly combination. But the other thing it does is it drives up the price of the electricity, which is already expensive. People are already complaining about that. And as you point out, Tim, we are burning more energy. We are supposedly in the middle of this energy emergency. Well, nothing exacerbates the energy emergency like having to burn more energy at a time when we've also got data centers burning the energy and all kinds of stuff drawing on that grid. So this is also an economic issue for that reason.
Are we going to be at a point where there's kind of hunger wars for power? Like, I'm just wondering, I don't mean to be so like exclamatory, but I do kind of wonder about this just fight for resources of all kinds going forward, or if it's not that, we're going to have to live very, very differently in order to make sure everybody has what they need, especially for the things that really matter.
Yeah, I mean, I think so. I'm the Debbie Downer here usually, but I think I will try to be a little bit uplifting. I mean, there is still a possibility that we can have enough energy for everybody, have enough energy to grow the economy. Relying on the fossil fuels of the past is not going to be the thing that's going to do that, because the externalities of that are going to keep growing and keep causing more of this economic turmoil, more of these disasters, more of these heat waves, making the problem worse. But we do have the power in our hands to use more renewable, sustainable energy that can help keep people cool, help run our economy, and everybody wins in the end. So that is within our power. We're not, the bad news is we're not actually, we're taking steps to reverse that as we speak.
30 seconds. Just one thought off of that. Since you follow the climate, are you comfortable as somebody who watches the climate, what's going on with like nuclear energy be part of that renewable answer to power? Is that better for the environment?
I mean, I'm all of the above. And so I think nuclear can be really a solution for it. I think we have to deal with the waste issue. And that's something that we really have to think about seriously. Issue of the cost and the time it takes to build new nuclear plants. They take a lot of time, but anything goes as long as it's clean in my book. That's just my opinion.
All right, gonna leave it there. Mark, take care of yourself, stay cool and stay safe. Mark Ongloff, Bloomberg Opinion Editor who covers climate change for us. Hey, coming up next, if you hadn't noticed, from some of the things Tim said, it's election day here in New York City.
Oh yeah, we got a great
it's rough.
Couple of voices. Oh, yeah. And also this is a concern for voters who are supposed to get out today.
Yeah, so anyway, we're gonna tackle that. Do not go anywhere. Bloomberg Business Week Daily, back in a moment.
421 on Wall Street. I'm Amy Morris. This Bloomberg Business Flash is brought to you by Oracle. Attention, growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. Fed Chair Jay Powell delivered his semi-annual monetary policy report to the House Financial Services Committee. Powell suggested lower inflation and weaker labor hiring could mean an earlier rate cut this year, but he added impacts by the tariffs on inflation could also show up in the June and July numbers. Boston Fed President Susan Collins says current modestly restrictive stance of monetary policy is necessary, even though it slowed new residential real estate development. Collins acknowledges that the housing market is very sensitive to interest rate changes. We do bring you closing numbers here each day at Bloomberg. NASDAQ 100 gained 1.5% for its first record close since February. The NASDAQ up 282 points. S&P up 67, the Dow up 507 points. The 10-year Treasury yield at 4.29%, the 2-year yield at 3.82%. FedEx forecast a worse than expected profit for the current quarter in a sign that soft demand from consumers and businesses rattled by tariffs is not likely to improve in the near term. Shares of FedEx down more than 1.5% in the post-market. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week Daily with Carol Masser and Tim Stinovec.
Hey, thanks so much for that update, Amy. Do appreciate Election Day here in New York City. 11 candidates competing to be the Democratic nominee for mayor. Leading most polls are former Governor Andrew Cuomo, though New York State Assembly member Zohran Mamdani is quickly gaining momentum. Mamdani's 33. He wants to give New Yorkers free buses and free childcare. He wants to tax rich residents and corporations to pay for it. He's vowed to impose a rent freeze, lead a fight against the president, and arrest Benjamin Netanyahu if the Israeli prime minister sets foot in the city. Laura Namias is a Bloomberg News New York politics reporter. She recently wrote about Mamdani trying to sell socialism to the home of Wall Street. She joins us here in the Bloomberg Interactive Brokers studio. We should note, former Mayor Michael R. Bloomberg, the founder and majority owner of Bloomberg News parent Bloomberg LP and Bloomberg Radio, has endorsed Andrew Cuomo. Laura, first the polls. It was looking like Andrew Cuomo was the clear leader here, but that's changed in the last few days. What's the latest?
Well, for months now, since before Andrew Cuomo even entered the race, all of the polling has shown Cuomo leading. The race has been tightening, though, in the major polls and the nonpartisan polls that we typically look at. And this week, one poll came out, an Emerson College poll, showing that Mamdani would win the race after 8 rounds of ranked choice voting by 4 points. It's the first major nonpartisan poll that has shown Mamdani winning the race in the entire contest, and it's at the 11th hour. Very interesting result.
It's kind of shocking, no? Surprising?
I mean, the entire story is shocking. Mamdani was someone who had almost no name recognition just 3 months ago. He went from 0% to 20% to now being within fighting distance of beating Andrew Cuomo, a seasoned political professional who served almost 3 terms as governor, but who has some significant negatives too. And there's a question of whether or not people are reacting to that in their support for Mamdani.
I want to talk a little bit about that support because you did a great analysis of where support is coming from, at least financially, for Cuomo and for Mamdani. And can you talk a little bit about who Mamdani's message is resonating with? What parts of the city, the profile of these people, who's supporting him with money?
So what we're seeing in this New York City primary is actually fascinating because it is in some ways emblematic of the generational divide that we're seeing in the Democratic Party nationally. There's a huge divide between older and younger voters. Older voters are tending to support Andrew Cuomo. Younger voters are mostly going for Zohran Mamdani. Cuomo has more support among Black voters who tend to be to turn out in really high numbers in Democratic primaries. Zohran Mamdani is doing really well in parts of the city that are home to college-educated voters, particularly in Brooklyn. And we're seeing Mamdani is campaigning on a message of affordability. Cuomo initially began campaigning on a message of tackling crime, and those concerns are different depending on what your demographics are and what your age is. And it's certainly a big split and a big divide in the party, and the two candidates could not be more different from each other.
We want to bring in another guest in just a moment into this conversation, but I want to ask you one more thing, Laura. Is somebody like Mamdani seen as an agent of change, like voters looking for something different in terms of their political leaders?
He would certainly be something different in that we haven't seen him on the political stage in New York. He is the person with the least experience in the Democratic primary. He's been an assemblyman from Queens since he was elected in 2020. He would be one of the youngest mayors in New York City history if he were elected. He would also be the first South Asian mayor and the first Muslim mayor of New York City if he were elected, and that's in the city's 400-year history. Wow. So that's certainly change, but any candidate would be a break from the current leadership of Mayor Eric Adams.
Laura is sticking with us. As Carol mentioned, we want to broaden the conversation a little bit and bring in someone who spent a lot of time lobbying politicians on behalf of clients in a range of industries, from tech companies to hospitals to unions. We've got Suri Kassirer with us, president of the New York-focused lobbying and government relations firm Kassirer. She joins us here in the Bloomberg Interactive Broker Studio, along with Laura Nahimis of Bloomberg News. Suri, I want to talk a little bit about the business view of a possible Mamdani as mayor. And look, we're going to go back to Laura in a second because there are a lot of possibilities after this primary, but given his rise in the polls and what we've heard from Governor Cuomo's supporters, how would you characterize how businesses in general feel about a mayor a candidate who's coming in saying, we want to raise taxes on corporations and we want to raise taxes on the wealthiest to pay for these social programs?
So I've been in business and had the opportunity to go through 4 mayoral transitions, 5 speakers, 4 controllers, and I think every leader comes in with their own view. But ultimately, they have to work with the private sector, and they also have to work with other elected officials and the 300,000 people that run city government every single day. So it's not as easy as one would think to actually make some of those changes. As a matter of fact, many of the things that Mamdani talks about, he doesn't even have the power to do because those are decided in Albany. So he would have to go up to Albany and convince Albany to make some of those changes. And as we've seen with previous mayors, that's not as easy as one would think.
But is it safe to say, is there a consensus in terms of the business community, the financial community, home of our audience, certainly, what they want? Are they worried about too much change and too much shaking up? And maybe, a candidate or a mayor that really speaks more to what citizens need versus what companies need, what industries need?
Look, I think that we've had mayors before that come from a more progressive agenda. And I think ultimately, in order for business to be successful, they have to figure out how to work with current leadership. And that's a lot of what I do every single day is help clients navigate leadership of the city of New York, help people align their views and think strategically about how to get things done that are good for New York.
Some of the chatter that I've seen online, and the chatter that I've seen from opponents of Mamdani have said, if you raise taxes on businesses in New York City, they will leave the city. Do you agree with that?
Look, I think New York is the home of the talent. I think that's why businesses come here. We have almost 150 universities and colleges in New York. We are graduating 500,000 graduates here, all of whom are trained, well-trained, and ready to work. And I think businesses come here for lots of reasons, but one of the reasons they come here is because that's where the talent is. Look, I'm very, very bullish on New York. I think New York is resilient. New York is an exciting, dynamic place to be. And I don't believe that no matter who is mayor, people will leave this city.
Laura, what have we learned about Mamdani in his 4 years in Albany in terms of the types of initiatives that he really put through?
So his legislative record is thin, I think it's fair to say. He has sponsored 3 bills that have actually been signed into law since his election, which is, when you compare him to another candidate in the race who has a legislative record or a term of office that's only a little bit longer, Zellner Myrie has sponsored and passed many more bills than that.
But there's quantity and then there's quality.
Well, yes, but more arguably substantive pieces of legislation. So his legislative record is not the strongest, Mamdani, but he is arguing that the case for him as a good manager or as someone who gets things done is looking at the actual way that he's run this campaign, which has been successful beyond anyone's wildest imagination. But that's really the extent of his experience managing or running something.
I'm not going to get into the intricacies of ranked choice voting or have either of you explain. Suffice it to say, there's some really good videos.
Yeah.
I watched one from PBS last night that was really helpful. I watched one from the New York City Board of Elections that was really helpful. It's not actually that difficult when it's broken down in these videos. But it also means there could be an extension of the time it takes, Laura, for us to understand who is the nominee. Add on to that, we might, even if one of these candidates wins and one doesn't, we could still see them all running against each other in the general election. Explain what could happen here.
So it is probably not going to be over tonight when the polls close at 9 p.m. Just fair warning for everyone who's looking forward to this being over, maybe. If no candidate makes it past 50% tonight, then we will have to wait a whole nother week until the Board of Elections runs the ranked choice ballots and we see the impact of who everybody ranked second, third, fourth, and fifth. So if nobody wins tonight, then it's going to be a whole week before we know. And the Board of Elections isn't going to certify the result until mid-July. And even then, even if Cuomo wins the Democratic primary or Mamdani wins the Democratic primary tonight, it's very likely that we're going to have a very competitive general election in November, which is really unusual in recent city history when the Democratic primary has been determinative. We're going to see current Mayor Eric Adams run as an independent. If Cuomo loses the primary tonight, he's vowed to run and is prepared to run on his own independent ballot line. And if Mamdani loses tonight, he is likely to get the Working Families Party ballot line in November. Add to that there's a Republican running, Curtis Sliwa, and another independent candidate, Jim Walden, and you have a huge field for the general election, a very unusual thing in deep blue New York City. So we have months and months to go before we find out who's going to be the mayor of New York City.
And Eric Adams is still running, right?
Yes, Eric Adams is still running, but he is not running as a Democrat. He is running on an independent ballot line. Stop Anti-Semitism ballot line.
So last 30 seconds, how important is it that who's ever mayor in New York City is able to deal with a very strong president in just got about 30 seconds?
So one of the key issues, I think, in this race is who is the strongest to stand up to Trump and who can handle dealing with everything that's going to come our way from Washington and managing our way through that, including a budget that's going to be very compromised by what's coming down from Washington.
Yeah, there's a lot of strong stuff. Surya Kastira, she is president of the New York focused lobbying and government relations firm that bears her name. And of course, our Laura Namias, Bloomberg News, New York politics reporter who's going to be super busy tonight and maybe even longer.
And get out and vote, even though it's 103 degrees. If you weren't one of the people who voted early, like I still have to go vote.
Yeah, good luck with that.
Yeah, I'm going to. It's
I
open
know
till
you
9. Will. Okay, open till 9.
This is Bloomberg.
It's 4:40 on Wall Street. I'm Amy Morris. We check markets for you all day long here at Bloomberg as we bring you the closing numbers. NASDAQ 100 gained 1.5% for its first record close since February. NASDAQ up 282 points. S&P up 67 points. The Dow raised 507 points. The 10-year Treasury yield at 4.29%. The 2-year yield at 3.82%. FedEx forecast a worse than expected profit for the current quarter, a sign that soft demand from consumers and businesses rattled by tariffs is not likely to improve in the near term. Shares of FedEx now down 4.4% in the post-market. Cleveland Fed President Beth Hammack says interest rates are only modestly restrictive and may remain steady for a while.
On inflation, we've made good progress, but we have some distance to go before we sustainably reach our 2% inflation objective. It may well be the case that policy remains on hold for quite some time before the committee initiates very modest cuts to return policy to a neutral setting.
Hammack notes official readings may not capture current developments, including a recent increase in oil prices. Fed Chair Jay Powell told lawmakers the central bank is in no hurry to lower interest rates as officials wait for more clarity on the economic impact of President Trump's tariffs. In the first of 2 days of testimony on Capitol Hill, Powell told lawmakers that, quote, many paths are possible for monetary policy. Kathy Wood is trimming her portfolio after scoring big with her latest bold bet. Circle Internet Group, a stablecoin firm that has seen its shares surge by triple digits since its debut as a public company. Wood's ARK Investment Management has offloaded about 1.5 million shares of Circle over 4 recent trading sessions, worth about $333 million. Shares of Circle more than 1% higher now in the post-market. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That is a Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Carol Masser and Tim Stenovac.
Hey, thanks so much for that update, Amy. Do appreciate it. It is the cover story. Actually, you know what? I do want to get to a little news, and then we're going to bring in our next guest, because it's a headline crossing the Bloomberg terminal.
Yeah,
Carol.
let me just quick do it. Just did cross, as Tim mentioned. The Israeli Defense Forces saying it intercepted 2 drones approaching Israeli territory, most likely from Iran, earlier this evening. The unmanned aerial vehicles were intercepted by the IAF outside of Israeli territory, again from the IDF. Sirens were sounded in open areas, which would, to some extent, contradict what we thought was a truce, or what we have believed to be a truce between Israel and Iran. But again, just another headline, and we'll continue to report this out to you as any new headlines cross the Bloomberg.
All right, well, let's get to it, because it's the cover of the July U.S. edition of Bloomberg Business Week. It's about the Gap CEO's battle to save the brand and the challenge that it is slammed into as a result of the president's tariffs. The iconic 90s retailer was on the precipice of death for years. Richard Dixon finally had momentum for a comeback. Then came Trump. Amanda Moll is the lead writer on the story. She joins us here in the Bloomberg Interactive Brokers studio. A great deep dive on Gap. Congratulations on the cover story.
Thank you.
I want to start historical here and just remind everybody what Gap was and what sort of happened when it lost its way. Like, I'm asking you to give us the entire story here, but think back to the 90s.
Wait, it's like fall into the Gap, fell into a slump.
Yes.
It did, but the 90s, this was so. I remember having my parents' friends coming and visiting us from Europe in a small town in California, and they wanted to go to the Gap.
Absolutely.
When they got to the United States.
Right.
Yeah,
that's
I
crazy.
believe it.
Yeah, it's hard to explain to people who are too young to like be aware of pop culture during the 80s and 90s, but the Gap was sort of like the king of American aesthetics for quite a while. During the 80s and the 90s, it was a store that was so powerful and so well trafficked that it commanded some of the same lease terms in malls as like anchor department stores that were much larger.
Right.
It was a company that sort of married the sort of casualizing, cool clothes of the era with this sort of like great fluency in pop culture. Its advertisements were these like incredible black and white portraits of, iconic celebrities and tastemakers, people like Spike Lee, Joan Didion, by these fashion photographers who were some of the most celebrated minds in the business. It really, cast a net in culture outside of the, $40 jeans and $15 t-shirts. It clothed everybody. The 100th anniversary issue of Vogue featured supermodels on the cover wearing Gap jeans and button-downs. It was truly an incredible force in, creating the idea of how Americans dress now.
Until it wasn't.
Until it wasn't.
Like, what brought it down? Too much competition? Like, walk us through.
Well, over the past 40 years, American retail has just changed a lot. Gap really thrived in an era when people went out to shop, when people went to malls. The rise of the Gap as a national retailer sort of mirrors the rise of the suburban mall as the place that people thought about going to do their shopping for clothes, as a cool place to go. And when malls started to decline, so did Gap, for many of the same reasons. Gap had grown really, really large at that point, and it had a lot of leases and a lot of sort of aging shopping centers across America. And then you get the 1-2 punch of some regulatory changes in the mid-2000s that led in a lot of international fast fashion retailers, Zara, H&M, things like that. And then the internet gave people in virtually everywhere in America a much wider access to different types of clothing. So suddenly there was just a ton of cheap clothes everywhere. And the sort of gamut that Gap ran, which was, cool jeans and t-shirts, people had caught on to it. People were imitating what they were doing. And so you combine that sort of like lease load and debt load that they had with all this new competition in these new retail channels, and they just fell off.
We're going to get to Richard Dixon and the task that he has set out for him and the obstacles he has ahead of him in a second. First, though, Mickey Drexler, a legendary name in the world of retail. What was his role in where Gap is today?
Mickey was Gap for 20 years. The Fishers, the family that founded Gap, hired him in 1983 after he had turned around Ann Taylor, and he stayed at Gap for almost 20 years after that. He built the company into the sort of cultural engine that it was at its peak. He sort of understood that, in order to sell jeans and t-shirts, the jeans and t-shirts had to mean something, and he was great at making meaning out of sort of regular clothes, and he was great at organizing a company that really sort of kept its fingers on the pulse of what people were interested in, what felt cool, what might motivate people to go out and buy something. And he, for 20 years, was sort of fantastically successful at that. But at the end, it wasn't enough to save his job.
Yeah, and I feel like then they kind of bounced around a lot, right? I think trying to figure out what they need to be in this very, as you say, I think you played out really let's be clear, retail has had a really tough time for a long time.
Right.
And so the dust is settling. I even think about Levi's that has gone through a revival of sorts. I just bought a pair of Levi's. I haven't bought Levi's in such a long time. But for the Gap, they went through a lot of bouncing around. And that also takes its toll.
Yes. So in between Mickey Drexler and Richard Dixon, the current CEO, there were 4 CEOs who were...
That's over like about 23 years?
Yes. So they lasted... it was actually almost exactly 20 years. So that they lasted all about like 4 or 5 years apiece on average.
They're just about getting settled, putting in initiatives, and then it's like gone.
Right. And, you know, the trouble that Gap has had with executives over the past 20 years mirrors a lot of the trouble that other sort of like great American companies have had in that period of time, looking for people to bring in to like solve one problem while then accidentally making another problem worse. So you bring in someone to deal with the debt load and deal with margin, and then they do that, but creativity sort of plummets. Then you bring someone in to deal with like the sort of overabundance of leases and closed stores and streamline, and they do that, but then the quality of the clothes also goes down because they're streamlining the materials being used.
Right.
So you are sort of playing whack-a-mole with all of these different problems, and when you are bringing on executives that are meant to deal with sort of like systemic issues or logistical issues or financial issues within a company, in a company that sells aesthetics, that sells ideas, that sells coolness, that can be really, really difficult in the long term unless you have like a sort of rare type of person, and it's just hard to find that person.
And it's funny, as they've gone along, like think about, I don't know, when my daughter was young, or Gap Baby and Gap Kids, like it seemed super successful. Like there are things that they've done that have done well, and then I don't know, like just I don't know whether it runs out of steam or momentum. I don't know.
Yeah, no, Gap is a fascinating company because it's got a bunch of brands within it. It's got Gap, but then Old Navy, Banana Republic, Athleta.
Athleta, right.
And then it's a bunch of those brands have sub-brands too. So like Gap has Gap Kids. Banana Republic tried Banana Republic Home. There used to be Piperlime, which was a Zappos competitor. There was Intermix, which Gap bought and then sold to private equity. It was trying to get more into like the higher end fashion game. Like there's been all these sort of like side quests and boondoggles and sub-brands and things that just didn't work. And what has underwritten a lot of that for a long time is Old Navy. One of Mickey Drexler's big things that he did for the company was launch Old Navy in 1994. And in that time, Gap's revenue has fallen by about half since its peak in 2003-ish. But Old Navy sells over $8 billion worth of clothes every year and has really like financed all these boondoggles.
Can I tell you, so many times I'll be like, that's really great. Old Navy. Like it's just, and like fashion forward even. It's pretty impressive.
So let's fast forward to today because you got a lot of time with Richard Dixon.
Yes.
And some really interesting commentary about like what he did when he first got to the role in terms of taking the executives shopping, hearing about their like relentless positivity in meetings that he didn't necessarily see as realistic.
Right.
What is his path forward in the face of tariffs, which you write in the piece, this company's actually pretty well positioned to deal with?
Right. So
on the face.
Right. A lot of what Dixon did when he got there was sort of change the attitude of the company, I think, because it's something that's interesting always as someone who sits like outside of these companies and is trying to figure out what's going on, that like when you have a company that's been like sort of beleaguered for a long time, I always wonder like, what do they think about what everybody says about them externally? And something that Dixon told us about, Lily Meyer was my co-reporter on the piece. He was like, he had this town hall when he first got there where he, had a slide presentation put together of all the negative headlines about the company and got up in front of the company and was like, everybody knows what we should be doing except us. And it's hard to say that they're wrong. It was sort of like, this like huge legacy company had become like a little bit moribund, a little bit complacent, and sort of figuring out a way out of that psychologically, I think, has been a big part of his tenure so far. And when you combine that with the sort of like long, unsexy work that has been going on, under him, but also before him, of cleaning up the company's debt, of cleaning up the discounting situation, because a big issue for Gap has been that they've trained their customers to expect everything to be 50% off all the time. And it's really hard to grow a business.
So true. It's so true. Like you get used to it. And
why would I buy it if it's not on sale?
No. And then exactly, and it's coming. I thought you were going to say the barrel jeans saved the company.
Well, they, I think, are indicative of something that might save the company, I would say, which is the capacity now for Gap, because it's cleaned up its logistics, it's cleaned up its supply chain a little bit, to see a trend coming, to have a product ready to go, and then have the technological and data capability to like put it into stores like at the right moment in order to like sell a bunch of it and not have to discount it and not have to send it to outlet and not have to,
doesn't end up at TJ Maxx. Sorry.
Yeah.
I love TJ Maxx.
So far not for these. So far not for these jeans. And it's interesting because barrel jeans are sort of these like curved outward, like sort of cartoon cowboy leg jeans that are a little bit silly and like very trendy and very young. And it's the type of thing that for 20 years Gap has not been able to do because they either bet on the wrong thing or it's too early or it's too late. But the success that they've had with these jeans, which aren't cheap and they don't discount all of the popular colors regularly, is indicative that they figured out the data and logistics capabilities to be able to like compete in this realm, which is big for them, I think.
Yeah, but it's certainly fashion forward. I've tried them on. They're just not quite for me. I don't know. Tim, have you tried them on?
I don't even know what you're talking about.
Have you tried them on?
I bought a pair while I was reporting the story.
You did?
Yeah, if you get them in the right like weight of denim, they look more slouchy than curvy when on.
Okay. Because otherwise you feel like you're like, okay, corral kind of
Yes,
thing.
it's a little cartoon cowboy.
All right. Amanda Mull, you are amazing. She is senior reporter for Bloomberg Business Week. Her story, it is the cover story of the upcoming new issue of Bloomberg Business Week about Gap CEO's battle to save the brand, slamming into Trump's tariffs. Because, yeah, that is certainly an aspect of this story as well, in a big way.
All right, I want to look at how things closed out the day today, Carol. We finished off our best levels of the session, but the S&P 500 higher by 1.1%, the Dow higher by 1.2%, the NASDAQ higher by 1.4%, excuse me. I'm Tim Stenivek, along with Carol Masser. Let's take a look at some stocks on the move today. Joining us is Carol Masser.
I am indeed. I'm going to get to the cruise stocks because we certainly did see a move in that group. Ticker, CCL, we're talking about Carnival Corporation. That went up as much as 10% high in today's session, finishing the day with a gain of about just shy of 7% here. And the company did report its latest quarterly update, and it raised its full-year profit outlook due to strong cruise demand, despite volatile economic and geopolitical conditions. The company now expecting earnings of $1.97 per share this year, up from its previous view of $1.83 per share, driven by strong booking growth and record pricing. Its net yields are expected to expand about 5% this year, with customers booking trips at higher prices, and the company's newest private Bahamian island opening in July is expected to provide an additional boost. This is something we've talked about with the company's CEO. We've talked with Josh Weinstein a lot. Stock is up about 3% year to date, but again, a big bump today in today's session, up almost 7%.
Okay, so that's a gainer. I got a decliner for you. In fact, a few of them. U.S. defense stocks broadly declined today. They were pretty much at the bottom of the S&P 500. You had Northrop Grumman down 3.1% today. That's ticker NOC. Also saw other companies such as Lockheed, ticker LMT, down 2.6%. RTX Corporation, it's the company formerly known as Raytheon, fell 2.7%, among the worst performers in the S&P 500. We saw U.S. defense stocks broadly decline as tensions appeared to cool in the Middle East. We did see a run-up in some of these names over the last 12 to 14 days as a result of tensions escalating in the Middle East. We all saw the news over the weekend about different munitions and different aircraft that were used. These defense contractors, beneficiaries of the use and procurement of these materials.
Yeah, and I think many people would say that in general, you're going to see a lot more defense spending. We've talked about Europe doing more to defend itself, but interesting to see that trade. Hey, I want to go to Uber. It was up about 7.5% at its close today. Shares trading higher on this Tuesday after the ride-hailing company said in a press release that it will be partnering with Alphabet's Waymo to offer ride-sharing through autonomous vehicles in Atlanta. Now, in addition, Lime, the Uber-backed electric bike startup, has hired investment banks to prepare for a U.S. IPO, according to a report from Reuters. So kind of a double whammy to the upside, as I mentioned. I mean, take a look at Uber. Just here in 2025, year to date, it's up almost 52% so far this year. So it has really been an outperformer. But again, adding on another 7.5% in the Tuesday trade.
Hey, I'm looking at shares of FedEx right now, down in the after hours by about 4.6%. The company forecasted adjusted earnings of $3.40 to $4 a share for its fiscal first quarter. That was below analyst estimates. The ticker FDX for FedEx. The company cites an uncertain global demand environment and will only provide a quarterly outlook, rather, Carol, than a full-year forecast. FedEx reporting just after the bell today, shares down in the after hours by about 4.6%.
And I'm just going to remind you, this on a day where we saw a rally in equities and you had the NASDAQ 100 hitting a record in today's session. All right, that is our Stock Movers podcast. Check out our 5-minute episodes on the biggest winners and losers in the stock market. You can find